How's it going today, guys? So what we were talking about today are the pros and cons of buying a dividend stock. And I just want to mention before I get into the video, if my voice is still sounding kind of weird, I have legit been sick for 9 days straight now. It's been awful. I don't know what's going on. I think I have the flu or something. I've been completely wiped out for like over a week now, and it's been rough. But still trying to get this content out to you guys. That's like my number one goal, or like my number one thing that I do before anything else is get these videos out, because this is really what I enjoy doing, and I really pride myself on being consistent with it. So despite being kind of scratchy voiced and sick, I'm still gonna get rolling with the video here. But I did a video already talking about just dividend stocks in general, and at the end of the video I'll link it up in a card if you guys want to check that out, because I can provide some other information to you about dividend stocks in general. But this was actually something that somebody reached out to me and wanted me to cover, are like the pros and cons of a dividend stock. So if you were somebody who was going to invest in some of these, what are the advantages of those and what are the disadvantages of dividend stocks? So also I want to mention too, if you guys have any questions about investing or any topics in general that I cover on this channel, please drop them in the comments below, and I'll either do my best to answer them in the comments, or I could do a video about it if it's a very interesting topic that I think would help a lot of people. Well, let's start with the pros of dividend stocks. I think I'm just going to go through all of the pros and then all of the cons, because otherwise I'll probably lose track of where I was. I tend to do that in my videos. I don't know if you ever noticed that. Occasionally I'll skip over a bullet or something because I'm just like going too fast between them. Okay, so the first pro to dividend stocks is that shareholders can take a consistent income from the stock market. Some people like this because it can be very passive, especially if you have your dividends automatically reinvesting. You don't even need to worry about getting that dividend check or doing anything with it. You just set it and you forget it. Some people like very passive investments that they don't even have to think about. And dividend stocks can be a great passive investment for you if that's what you're looking for. And then you get those dividends that are either paid quarterly or yearly, and it's consistent income coming from the stock market, and you don't even need to touch it or do anything with it for the most part if you have it set up to automatically reinvest those dividends. The second pro to this is that profitable companies frequently increase dividends, so as their profits are increasing, their dividends can increase as well. The next one is that more stable and established companies offer dividends, and when you're investing in these more stable established companies, there's significantly less volatility as compared to investing in maybe like a high-tech stock or any of those NASDAQ technology stocks. So there is less volatility. That does end up being a con on the list over here. We'll explain that. But they end up being kind of very slow-moving stocks. They don't do a whole lot for the most part. But if you are looking for a very stable investment, this isn't a bad option as long as you're investing in a good dividend stock and doing your research beforehand. But for the most part, because they're more established companies, there's a lot less volatility and risk associated with these. The thing with dividend stocks that's good is they tend to hold up better in a bear market. If you don't know what a bear market is, there's a bull market and a bear market. Bull market is basically a good market when stock prices are moving up overall and indexes are moving up, and a bear market is when indexes are moving down. But in a bear market, they tend to hold up better because a lot of people who invest in dividend stocks are investing for the long haul. The other thing is because a lot of people in a bear market will flee to dividend stocks as a safety net when they don't know what to do with their money. They don't want to be invested in high-risk companies at that point, so they'll kind of take a safe haven in some of these dividend stocks. So they can be, especially utility stocks too. A lot of people like going to utility stocks in a bear market, and a lot of utility stocks are dividend stocks. So that's a good advantage too, is they hold up better in a down market. They're actually more tax efficient than bonds or other ordinary income, and that's simply because of the tax structure. They're actually taxed at a lower rate than ordinary income or income from bonds. Investors also like dividend stocks because you're paid in two ways, or you can be paid in two ways. So if the stock price goes up for that year, you've been paid by that difference in whatever the stock price was at the beginning of the year. And then also you're getting paid those regular dividend payments, so you're getting paid in two different ways, one being stock price and number two being those cash dividends, whether you're taking them as a cash payment or reinvesting them into more stock. And then dividends can also allow you to hedge your bet. So the example of this would be, let's say you have a stock, and for the year the stock fell 4%, but the stock actually paid a 3% dividend on that stock price for that year. You're actually only at a 1% overall loss because that 3% dividend to offset that 4% loss on stock price. Dividends also allow you to take advantage of compounding if you're reinvesting those dividends every quarter or every year. So I'm sure you've heard about how good compounding interest can be over time. So if you want to get involved in compounding, dividend stocks with a dividend reinvestment is like one of the best ways you can do that. And the last one is that they're actually inflation resistant for the most part, and that is because as prices rise overall, the profits of these companies tend to rise. And dividends are generally based off of the profits of a company. So as the profits rise, naturally the dividend payments should rise as well, making dividend stocks a little bit more inflation resistant than non-dividend paying stocks or maybe smaller cap stocks. Okay, so those are like the pros of dividend stocks. Now we're going to get into the cons or the disadvantages of dividend stocks. One of the main disadvantages that I see, and this is something people don't realize, is that dividends are not guaranteed. Just because a dividend is just because a company is paying a dividend right now doesn't mean they're going to continue to pay it. That's because a dividend can be reduced or eliminated at any given time. The other problem is around diversification. I'm sure you've heard the saying before, don't put all of your eggs in one basket. You want to be spread out across many different industries. You don't want to be all involved in one industry. The problem is that companies that pay high dividends are usually these old school industries and utilities for the most part, and it doesn't really give you adequate diversification. So if you are investing in dividend stocks, I wouldn't recommend putting all of your money into utility stocks in case that industry doesn't perform well or whatever you decide. So you may not want to have all of your investments in one industry, and it's kind of hard to get adequate diversification because a lot of these dividend stocks are in the same industries. The other disadvantage is that faster growing small cap stocks with more upside potential, a lot of those NASDAQ technology stocks, they rarely pay out dividends because a lot of those companies aren't even profitable yet. And dividends are paid based off company profits, and they're from more established companies because not every stock, I'm sure you know this by now, but not every stock pays a dividend, especially newer companies and high-tech companies because they're generally not even turning a profit. Because they are more established, more stable companies, they actually lag in performance and growth for the most part when you compare them to some of those high-tech or small-cap stocks. They also are likely not going to just completely bottom out or fall in stock price or do anything crazy. There's not a lot of volatility. So that can be an advantage if you're looking for a lower risk investment. But they also can be kind of like a sleeper stock where they're not doing a whole lot. When you're checking the stock price every couple days or whatever, they may not even be moving for the most part. So you got to kind of look at what they're doing year to year because they're a very long-term investment. The other thing, I don't know if this is even, I just threw this on here because I was doing research and one of the articles I read mentioned this, but they are riskier than a high quality bond. So if you're looking for like completely low risk investments or like the lowest risk possible, dividend stocks are actually riskier than a high quality bond. So it's just something to consider. I threw that in there. And then the other thing is that high dividends can actually be misleading to an investor. So if you saw, so let's say you had a company that was paying a cash or a dividend that was a dollar amount per share, okay? And we'll say that the stock price was $50 a share and they paid a $1 dividend each quarter. I'm just making these numbers up. I'm not saying this is typical. And then let's say the stock starts to perform terribly and the stock price falls to $25 a share, but they're still paying a $1 dividend per quarter. All of a sudden, that dividend doubles. Basically, that stock appears to be paying double what it was before. So people might see that and think, oh, this is a great stock to invest in. They're paying a great dividend. But the reality of the situation is that stock is only paying that dividend. It only appears to be that much higher because the stock price was cut in half. So dividends can be misleading based on the dividend yield calculation. And I actually talked about this more in my other dividend stock video. So like I said, at the end, I'm going to have that as a card. So if you want me to explain that better, I'm not going to get into it in this video because I already touched on it in that video. So just check that video out if you want more information on that. And then the other thing is that the tax rates for dividends can change at any time. So it's only right now that these tax rates are better for dividend stocks as compared to ordinary income or bonds. But at any time now, they could change that and they could make dividends be the same tax rate or even a higher tax rate than bonds and other ordinary income. So that's not something that you can just rely on as a given. It could change at any time. And then the other thing, and this may be a pro to some and a con for others, but I put it over here on the con side because they do grow slowly, and that makes them a very long-term investment. So if you're not looking to invest long-term, 10 plus years or whatever, 5 to 10 years or 10 plus years, I would say. I mean, if you're not investing for as long as 5 years, if you're planning on using that money within the next 5 years, I wouldn't do these long-term investments. You're talking more 5 plus at the minimum. And the longer you let them grow, the more the compounding takes place and the more you're making. But they're very slow at first. So if you're investing it for just a couple of years, you probably won't even see much of a difference over a couple of years. So they are a long-term, slow-growing investment, which may be a con for some. But that's pretty much all I got for this video, guys. That's the pros and cons of dividend stocks. And like I said before, if you guys have any questions about the stock market or any of the topics I cover on this channel, please feel free to drop me a comment below, and I will answer the comment or I'll make a video about the topic. And then the other thing I wanted to mention too, guys, if you're interested in learning about trading in the stock market, I do have a stock market trading guide which talks about technical stock analysis, which is the type of analysis I use when determining when to buy and sell stocks that I trade. And I'll have a link to that in the description as well, and there should also be something popping up on the screen here as well to tell you more about that. But that's pretty much all I got for this video. If you guys did enjoy it, I would appreciate it if you drop me a like, and then you can subscribe to be notified of future uploads. And I thank you guys for watching the video.